All right, and we are live. I have forgotten to turn on my mic. Hi, everybody. My name is Never One Deal Away. Welcome to Money Matters, where we're going to be discussing what is going on inside the market, inside the money. We're going to cover some of the prices, some of the news of what's going on, what's happening, how it's going to affect your money. And we're going to be covering, of course, the prices, the most recent prices of some of the assets that I think everybody is following. So I'm excited to be doing this for the first time ever, and it looks like I am live, y'all. So this is very, very exciting. I actually have to check on something because if this is actually working, oh my gosh, yes, we're officially going live on One Deal Away /live. So if you want to watch and follow, this is where you will be able to see all of the shows. We'll be able to interact in some way, shape, or form. I'm still trying to figure things out, but here we go. This is beyond excited. So let's get started. All right. And welcome back. We have all kinds of news to be going through. And I am very excited to actually tell you about what I have been able to find on the news. So let's get started with that. So here we go. You might have heard that there was a new bill that was being talked about whether it's going to be passed. So House is officially passing a 3 trillion stimulus. However, there's pretty much no future when it comes to Senate, and President Donald Trump has already rejected and said, we're not even going to talk about it. I am going to veto this. I don't like it. I don't enjoy it. I don't want to do this. But basically, the measure is what they wanted to do is to be able to provide additional funds for governments, for people, for businesses, and wanted to do a new round of $1,200 checks, as you can see, and would give cash-strapped states and local governments more than $1 trillion. So this is actually being pushed by House Speaker Nancy Pelosi. And this was one of those things that was started by the Democrats and now the Republicans. And the problem is that they're going to be, going through and like fighting throughout this whole thing. But the challenge with the whole thing is that, they are the end result for all of us is going to be that, while they're fighting, the rest of us are suffering. So hopefully they'll come to some sort of resolution. I don't know how you feel about it. Maybe you love it, maybe you hate it, you agree with it, you don't agree with it, and that is perfectly fine. Just one of those things that is very interesting that they are showcasing here in the article, that basically it has officially passed for the House, but we'll see where it will go. Likely nowhere, based off of the information and news that we are receiving. All right, so let's cover some of the stock prices. So here we go. This is the most recent. So let's see. Dow had a semi-okay day yesterday, as did Nasdaq, or actually Friday. Sorry, y'all. It's a Sunday today. So here we go. So the market would actually up, and that was kind of something that is a bit interesting. Although if you go through and actually let me see if I can zoom this out so you can see it. Because what's the point of having it on the screen if you can't even see it? But if you look at it, you can see kind of how, and I'm even choosing S&P because it actually has performed a bit better. But you can kind of see that it's kind of flattish, right? Like there's nothing much exciting going on. This particular one is not giving us a, I'm not necessarily enjoying that you can go from a month to a year. I wish we could see like 3 months, 6 months, because what part that I have been sharing with folks that I expected for this to happen within the markets is that you will go in kind of nicely chugga from about October of 2018 till that February into the March when the crash kind of came. you can see that the curve was a bit steeper, right? You can notice it. You can see kind of how it's flatter over here. Then we had this a really big crash, so we went from like 33.86 on February 19th, right? And then all the way down to the low of 22.37. Now, since then, we have actually recovered rather nicely, 28.63, almost 64. But you can also see how it's kind of, it had a good momentum, but you can kind of see how it's almost like flattening a bit of as it goes through. Now, of course, we can look at it a much bigger picture, and you can see that basically this is the prices that we've seen, in early 2019, or it's a similar price, if I can see this pretty okay, of what was happening in October. So we've wiped off quite a bit of the gains. However, of course, if you have been in the market from well before, you're still doing pretty okay. Now let's switch over to gold. I know a lot of people are into gold, wanting to see kind of what's going on. And here is a 60-day gold price. As you can see, kind of went from that 1500 level or so. We had the nice little run, kind of took a little bit of a dip, went back, and now we're sort of flirting in the areas between 1700 and 1750. As you can see, when it comes to the returns, obviously in 20 years, well over 500% returns. So congratulations. On a year basis, we're talking 35, almost 36%. In 30 days, 4%. And of course, today price is slightly down from what it was yesterday. One of the things to note about gold is trading around the clock 24/7. So unlike stocks where it's Monday through Friday and it kind of starts at that like 9:30, ends around 3:30, 4 o'clock, you can do a little bit of pre-market, post-market, but it pretty much is done and over with. So our stock investors are not doing much of anything, but the gold investors, especially if they're trading, they're doing this around the clock 24/7, just similar to kind of what's going on with the currency exchange, which we'll be going into next. One of the pieces that I did want to point out is that while the gold price, maybe what you see over here, the 1742, where it stands currently, is that physical gold is a bit more expensive. Now, of course, the spot price, so this is the spot price. The spot price is basically based off of the paper gold, which is that gold that is in the futures, that is tradable. And so that's sort of the price that you can expect to be able to see when you are in the paper asset. Now, when you buy physical gold, it's a little bit different. When you purchase physical gold, there's a premium typically, and the premium kind of depends on where it is based off of the current situation. So right now, kind of where we are is that we are basically there's more demand for it. And so while this particular price of 1742 is true when it comes to paper assets, many people are saying that, this can be manipulated, which it can. And we have had proof that in a history in the past, many large banks, JP Morgan is one of them, that has been even found responsible for doing these things, that, simply put, they were manipulating price of silver. So of course, silver is and can be heavily manipulated, as can gold. But physical gold is a little bit different, because in order to take a possession, that means that somebody actually has to go out and dig it up and purify it and put it in some sort of bar or a coin, right? So it has to be minted in some sort of way. Then it has to be shipped. So it takes a whole lot more work than just creation of paper gold, because paper gold is basically a derivative on the market. They kind of trade on the price, and a lot of it is traded on the futures, where futures in the past, vast majority of people didn't expect to receive physical. They would just sort of turn the contract over. If you think back to what has happened with oil futures contracts that has transpired a little while ago, you will recall that we were actually went negative, and nobody was buying, because when you come to the end of the contract, you just kind of try to roll it over. But the problem is that nobody was wanting to roll it over, and so nobody was going through, wanting to actually repurchase that whole piece. So people ended up having to actually take a possession of it, even if they didn't want to. And while it's not the worst idea on the planet to get oil and get paid for it, if you don't have where to store it, then it becomes a big problem. So there goes that. All right, so let's switch over to cryptocurrencies. Here we go. So you will see the market overall is up. Bitcoin is doing pretty well at over 9,700. Ethereum is over 200. It was flirting around 190 something for the past few days. As you know, we had the halvening or halving, depending how you want to call it. I want to say not just under a week ago. When that happened, we kind of had a little bit of price drop. And let me see if I click on this, if I can actually get a chart, because I believe the charts are much better and easier to kind of understand. So you can kind of see that we did kind of go down and dip. And if we take a look at the week, you will see that we've been actually performing pretty nicely. This right here was the halvening was right around here, so we kind of saw the almost pre-halvening dip that kind of happened, and we've been chugging along really nicely. The high, we almost reached $10,000. If we zoom out to 1 month, you will actually see that we did touch upon $10,000 for a little bit, but you can see this beautiful channel that is trading in that is, highly bullish. When you look at this stuff, it's very easy. This is the reason why I love charts, y'all, because you can look at the chart and be able to really see the direction that it's going in. And we had this nice little dip right around here. So this was, May 10th. That's basically what I was explaining to you, that we had that halvening. Look how nice of a dip. Then we had this beautiful cup formation, which is typically a confirmation that we're going higher. So that's kind of the beautiful piece. If we look at it over the course of a year, you will notice that we are still up from where we were. The year started in the 7,200 or so level. We did, reach up to, like, I want to say 13,000, yeah, almost 14,000. And then we kind of hit a little bit of bearish territory for a little while, started to climb up as we entered the year. Then we had this big old crisis in March. We dropped with everything else. So when March thing happened, we saw a drop in prices of gold, of silver, of stocks, of crypto. Like, just about everything went down, and then things were kind of starting to get their own legs. This was the interesting piece that kind of has happened, but you can see how beautiful this is, and we're really recapping back on the gains. Of course, one of the things to notice is that crypto is still pretty volatile, although not as volatile as sometimes stocks have been lately, because we've noticed that lately stocks have been actually pretty volatile as well. Ethereum, I actually wanted to show you kind of another piece that's been going on. So this is the 24-hour market right here. So you will see we kind of went down. We've been sort of trading a little bit of sideways, and we actually hit a nice little spike early this morning. On a weekly basis, again, it has a nice little positive bull channel, and this is what I'm talking about, that it was sort of flirting in the 1900s. That would be nice, right? You wish. In $198 over the month course. Again, not as bullish of a chart as you saw in Bitcoin, but a bullish chart nonetheless. And of course, on an annual basis, it's not performing as well. It's not performing as well for sure. We're definitely down on a year basis. But the nice part for Ethereum, it's never meant to be, it is meant to be a tradable asset. Everything is a tradable asset. As long as there's a market, you can trade it. But it's never meant to be sort of like a storage or any of that stuff. It's always meant to be a utility token, so to speak, an ability to get into this stuff, to be able to go in and create your own apps and to create your own contracts, and kind of that's what the whole concept has been. So it will definitely be an interesting piece to watch and see how it develops. The other piece that we see is XRP is doing pretty okay. They've been around 22 cents for a very long time. and that's been interesting. So the way that this actually is sorted over here is by market cap. Of course, you can sort it by the change, and then you can see that there are some, coins that have gone up, actually hyperbolic. So you're absolutely welcome to go in and take a look at the stuff. Just be very careful, because if some of it, if the market cap and the trading volume is super low, it doesn't really matter what the change is, because it's going to be super risky. Oh, hold on, sorry, I was going to show that was the biggest gainers. Oh no, I am clicking things one too many times. Sorry, y'all. Let me see. Let's try this again, because clearly I am clicking on stuff, and poor Coinbase is freaking out saying, "What in the world are you doing, my friend?" So let's see. Can we do this? Here we go, the biggest gainers. And now I actually want to switch it to the biggest losers if we can. Oh, the market is up a little bit more now. So you can see the biggest losers of kind of what's going on. And again, there's a bunch of these coins, because with the current environment, ability to create new crypto is pretty easy. So if you're going in, you're pretty new, you want to be very, very careful of which ones you are actually getting into and buying, because as you can see right over here, the market cap for some of these things is like zero basically. So I don't know that I recommend getting into that stuff, although if you know what you're doing, I mean, obviously by all means go for it. All right, and now let's go in and kind of talk about um, what I wanted to cover really here is the US mortgage rates. And before we do that, we're gonna take a sip of water. So while I do that, you ponder upon what we just talked about. Okay, that was fabulous. Okay, that felt good. So here we go. As of May 17th, and today is May 17th. So there we go. Super, super brand new, hot off the press, as they say. U.S. mortgage rates continue to hover at close to record lows. So mortgage rates saw another sink uptick in the week ending on 14th of May to deliver just a fourth weekly increase in 8 weeks. So 30-year fixed rate rose by 2 basis points to 3.28. Last week it was 3.26. However, there's not much happening, and of course, compared to this time last year, we're down 79 basis points. And if you don't know what the basis points means, it's that sort of point, the second part of it. So that's 0.79%. That's what basis points is. So I just want to make sure I explain it in case you don't know what it is, and I don't want you to miss what's going on because you didn't understand. So, since this is an interesting piece, so the 30-year fixed rates were also down by 168 basis points since November 2018, which was the most recent peak of 4.94%. So that means, right, let's do the math. It's 1.68% down from what's been going on in November 2018. There are folks that have been mortgaging, of course, most people actually mortgage their homes, and we have to get a mortgage because most people can't afford to pay the average price of a home, which is about $250,000 to $315,000. So most people don't have that, but they have 3%, 5%, 10%, 20% to put down, and then they finance the rest of it. And so if folks have been sort of financing it before, now it could potentially be a time to refinance if you really think about it. So that might be a piece that you might want to think and consider of doing. But one of the piece that is, they are basically everybody is expecting things to go negative. Federal Fed or the Fed Chair Powell added the risk aversion in the week, and so there is a speech scheduled for Wednesday where we'll talk about sort of what the outlook of the economy is, and I will make sure to cover that on this particular channel. And if you're curious as to what the channel is, of course, you can join us on onedealaway.com facebook.com/live, and I'm going to do my best to actually go live, every morning at 7 a.m. And it might not be necessarily every morning, but we'll see how it works. I'm gonna do my best to see if we can do this piece because this is gonna be super exciting. So, anyways, you want to definitely tune in on Wednesday. So, Freddie Mac rates, you can see that they are right 3.28, 15-year decline to 2.72, and the 5-year fixed rates is at 3.18, which I don't know how many people actually go into 5-year fixed, but who knows, maybe there are people that actually go and do that. Now, one of the things that is interesting is this piece right here. So according to Freddie Mac, mortgage rates continue to sit near to record lows as homebuyer demand slowly picked up. While purchase demand tumbled to a new low in mid-April, purchase demand is now down by just 10% from a year ago. In spite of pickup in demand, inventories are low and declining, however, which will limit purchase activity. Okay, so this is an interesting piece if you really think about it. So the rates are super low. We're starting to see a bit more buyers kind of starting to come in, but there's not as many inventories, so sellers are not necessarily quite sure whether they want to sell. Now, one of the things that I had expected is that we might see a bit more sales kind of coming through. I know that some of the sales have actually stopped because people didn't want to go in and buy, and there was not much activity, and you had to go and do the virtual sort of house viewing, and many people didn't want to do that. They actually want to go in, touch the place, see the place, measure things, right? Like you want to imagine yourself in the place. So it will be very, very, very interesting to watch what happens over the summer and fall months. And of course, this is all tied to the economy. So that's going to be definitely interesting to pay attention to, because if the prices remain low, or if the supply remains low, sorry, the prices will likely start ticking up. So that's kind of an interesting piece to do. And if you are looking to buy, it might not necessarily be the worst time per se. Although there's many expectations, and I'm one of the people that is also expecting home prices to actually go down. However, I could very much be wrong. I have been looking at all of the fundamentals. People, economy was shut down, people losing their jobs, inability to pay mortgage, inability to pay rent. And in my head, I'm thinking all of this stuff is going down, and yet, market is still up. Although it is slowing down, it's still up. Everything kind of keeps going up. And so part of me is almost thinking, are some of these stimulus bills and some of the changes that have been implemented, is that something that is causing inflation in the asset prices? We saw that after 2008, 2009 crash, where our income may not have gone up, and some of the other pieces may not have gone up as much, but the prices, asset prices, absolutely did go up. And so we could potentially see another one of those that kind of comes in. I am just a bit wary right now because some of these forbearances and sort of forgivenesses and that kind of stuff, those are coming due in the upcoming months. So it's definitely a bit uncertain time still, in my humble opinion. But again, we'll see. We'll see kind of how it goes. All right, Mortgage Bankers Association rates. So for the week ending May 8th, rates recorded to be, so about 10 days ago, right? So here we go. FHA remained unchanged at 3.37. Okay, and of course that's for 80% LTV or loan to value. So that basically means if you buy $100,000 home, 80% loan to value is $80,000. You're able to borrow 80%. That's what that is. Average interest rates for 30-year fixed with conforming loan balances increased from 3.4 to 3.43. So not a whole lot. and the average 30-year jumbo loans balance remained unchanged at 3.69. So one of the things that is also interesting is that the article pointed out that they're reporting that there are actually a bit of drops in the application. So here we go. We are at the MBA association and not like Masters of Business Administration. This is the Mortgage Bankers Association. Different kind of MBA, y'all. Different kind. Builder application survey data for April 2020 shows mortgage application for new home purchase decreased 12% compared from a year ago. So compared to March 2020, application decreased by 25%. Okay. So we are definitely down, and it does not include any adjustment for typical seasonal patterns, which is really interesting that they're talking about the seasonal patterns because, from my knowledge, and one could argue it's potential limited. I'm not a mortgage broker. I'm not a real estate agent. Just an investor. But my understanding is that typically, spring, summer, fall, we tend to see, especially spring, we tend to see a bit more of, right, like we're allowed to go outside, we're allowed to go play with things because it's not so cold, and so you want to go outside. We tend to see the market kind of pick up and become a bit more interesting. So it is very interesting to see that we are down 25% in applications since March, and 12% year over year. So that's kind of the piece that it is a bit interesting to pay attention to. Now, one of the things that I did want to make sure that I covered is, to talk about the whole, like, knowing that after winter time, we tend to want to go outside, that we are doing stuff, that we are enjoying, being with people and doing things, after winter, this virus situation piece can potentially also give us that ability to see that once things reopen, and some things have opened like this, some pieces are like very slow to reopen. So for example, many of you may know that I'm originally from Europe, and so different countries in Europe are doing different things, just like different states are doing different things, just like different countries around the world are doing different things. But one of the things that is very interesting about Serbia is that they were on a lockdown. So May 1st weekend kind of came through. That Monday, they opened everything. I want to say everything except for like maybe schools and that kind of stuff. And so all of a sudden you went from everything locked down, martial law, right? You can't go outside, you get arrested, all of that stuff, to Monday morning, showed up, stores open, malls open, hair salons, sorry about that, hair salons, gyms, like you name it, everything was open all of a sudden. So that was an interesting piece. Where I am right now here in New England, it's a little bit different. It really varies from state to state. Most states looks like they're going to open it up in a bit of stages, but I do see a bit more pickup of things, of people are a bit more outside, people are doing more things. And so this is really exciting to be able to watch and see, and I think we might actually see a bit of an uptick in the economy, which is going to be quite lovely. And so it wouldn't surprise me if the markets actually pick up a little bit, and if we see real estate pick up a little bit, but we'll definitely monitor it. And of course, if you want to watch live and get news before anybody else and watch before others do, make sure you come tomorrow, check it out. We're gonna go live at 7 a.m. Eastern Standard Time. And thank you for watching. Here I want to actually share with you, actually, you know what, I'll do that tomorrow. So I will share with you tomorrow. But the website, we're still working on building it and kind of trying to get the chat, so I apologize that I don't have that quite yet. Still trying to figure out how in the world can I make that happen. But I promise at some point in the near future we will have a chat service. We will have abilities to subscribe, to join in for the chat, and hopefully more people will kind of join in, start watching, and this is going to be beyond exciting beyond peace to actually see. So thank you so much for watching. I appreciate you. Make sure you join me tomorrow, onedealaway.com/live. Until next time, stay forever money blessed. And do remember, you are only one deal away. Bye, y'all.